Hello class, and welcome to our today's lesson. In our today's lesson, we are going to look at another illustration on how we prepare the accounting statements for the non-profit making organizations. So in this case, we have an illustration here about the cash book summary for the Mbedodo Football Club for the year ended 30th June 2011. On the left-hand side, which is actually the debit side, we have all the receipts, meaning money coming in. And on the right-hand side, which is the credit side, we have all the payments, meaning money moving out of the business. Then we are given the additional information here. The assets of the club on 1st July 2010 was as follows. We have got all this. Remember, the 1st July 2010, it is the same as the 31st June 2010. Because the last day of a financial year is equivalent to the first day of the next financial year. Then we are told that the bar supplies owing amounted to 4,200,000, meaning that the purchases for the bar purchases that we have here, the bar supplies, this is what we paid in cash, but this one has not been paid. So when we want to know the total amount of the bar purchases that we made, it's actually what we paid in cash and what is still owing, so that we can get the total purchases both in cash and credit. And I want to remind you that in the receipts and payment account, we only record the cash items, cash received and cash paid, either in hand or using the checks. We don't record anything on credit here. The other item that is appearing under the additional information is the inventory on 30th June. The key thing here is to look at the date. Remember, 30th June is the end of the financial year. This is then the closing stock. Also, the prices in hand. Out of the prices that we bought here in the payment side, this one has not been utilized, so they are still in the club. And we also have the bar owing supplies, which is amounting to this. The secretary is to receive a leave allowance of 5% of his basic salary. That is also supposed to be factored. Also, you will find that there's a subscription. The subscriptions that are supposed to be paid. The subscriptions that we received in the financial year, we are supposed to do some adjustment. Some of them are for the previous year, some of them have not been paid, and something like that. So we need to prepare the subscription account so that we can be able to determine the subscription amount that was supposed to be paid in this particular financial year. Then the interest earned from the SACCO deposit is amounting to this. So we need to get the interest on that, and then we treat it as an income. Then we have the rent paid was for 15 months. If it was for 15 months and one financial year has got 12 months, then you can be able to know that there are 3 months that we have not actually utilized that amount of money. That is actually the prepaid rent. Then we have the gymnasium and equipment are to be depreciated at this rate per annum. So we need to calculate the depreciation for that. I want us, first of all, to look at the workings before we go to the solution to that. Under the workings, this is what has been done. First of all, is to get the depreciation on equipment. We have been told it's 10% of the cost. You just get the 10% of the cost of that particular gymnasium as indicated in the balances that we are given. Another thing that we are supposed to do as a working is to get the net profit from the bar trading. Here, it is simply a simple income statement whereby we have the sales less the cost of sales, where it is opening stock plus the bar purchases, then you less the bar closing inventory, so that you can get the cost of sales, and then you less any expenses that is associated with the bar, where we have the bonus to the bar manager and the bar manager salary. You include them because these expenses are specifically meant for the bar. And then you get this are the total expenses. You minus from the gross profit, you get this is the net profit. This net profit is treated as income when it comes to preparing the income and expenditure account. Another adjustment we need to do is on the subscription account. The subscription account is prepared using the approach that we discussed. You start with the cash that was received. On the receipt and payment account, this is what we received. Out of this that we received, this amount and this amount, they are not for this year, because this amount, it is subscription for the previous year, and this is the subscription for the next year, meaning that they are not for the current financial year. Then we less it. And in accounting, I want to repeat again, when a figure is on the credit side and then we record some figures on the debit side, in simple terms, we are subtracting those figures. This is the same as 49,850. Then you rest this because they are not for this financial year, yet they have been included here. We also add what has not been paid in this financial year. So this is what was received in cash. This one has not been paid, but it is for this financial year. So this is the total amount that we are supposed to receive, but we subtract what is not for this year, which was paid this year. This figure of 50,700,000 is what we are looking for, Remember, the figures are in thousands here, meaning that any figure that we have here, we are supposed to add 3 zeros to the right so that we can be able to get the correct figure for that particular account. The prices in hand, this is not cash, but not rand, sorry, but in hand. This is what we bought. We bought prices worth 24,600, but at the end of the financial year, these have not been utilized, meaning that this year we have utilized these prices only. When it comes to the rent, what we actually received, or what we received is this, but this one is prepaid. What we paid is this, but this one is actually prepaid because it is for the 3 months from July, August, and September. So this is what was supposed to be for this year only. Another adjustment that we are supposed to make is on determining the accumulated fund. And in determining the accumulated fund, we prepare a statement of affairs whereby we have the assets minus the liabilities. These assets minus the liabilities will give you capital, which is the same as accumulated fund when it comes to the non-profit making organization, which is actually this figure. And that becomes the end of the adjustment. After having done the adjustment, your work now becomes very simple in preparing the 2 statements, the income statement, the income and expenditure statement, sorry, and the statement of financial position or the balance sheet. The income and expenditure account is simply the incomes and the expenditures recorded, and then we subtract the 2. In this case, the income to this particular club is the profit from the bar trading, which is actually this one as obtained in the working. The subscription for this year was supposed to be this. The interest earned is this. The entrance fee, this, and we have the competition receipts. Remember, the entrance fees and the competition receipts, this one, you just pick them from the receipt side of the receipt and payment because they did not require any adjustment. On the expenses, we have this, the prices given, the allowance, all these, unless something like rent was requiring adjustment, all these you get them from the payment side. So the total income minus the total payment will give us now either the surplus or the deficit. But in this case, the total income is higher than the total expenditures. So this particular club witnessed what we call the surplus. When it comes to the statement of financial position, you will realize that we have the non-current assets where we have land and the gym and equipment. For the gym and equipment, remember you are supposed to do some adjustment. It is the total cost minus the depreciation that we calculated. You find that this figure, 225 million, is actually the net book value. Rand was not depreciating, so its cost remains to be its net book value. And then when you add the two, you get this. The current assets, anything that is meant for the club, including the subscriptions that have not been received. Remember, subscription is an income. Subscription or accrued income is actually a current assets. You have the buy inventory, the prices in hand, the circle. Remember, this is the stock that we have not utilized, the circle interest, the bank, all these, they will give you the current assets. So the net book value of the fixed asset and the total value of the current assets will give you the figure for the total assets. Then you minus capital and liabilities, which you now will give you the figures. And actually, remember, for the statement of financial position, total assets and these liabilities and the capital, they are supposed to be the same. Thank you very much.